Welcome to Klingenstein Fields Advisors Investment Outlook. I'm Susan Curry, Chief Operating Officer, and I'm here with Greg Galinsky, our Head of Analytics and Risk Management. Greg, the markets have recovered from the dip in April and have performed strongly year to date. Can you tell us a little bit about that?
Sure. After a soft patch in April, equities rallied strongly through the quarter. As of September 30th, the S&P 500 is up nearly 15% year to date. Small cap, international, and emerging markets have also advanced off their lows, though large cap tech stocks have been a key component of the recent advance.
So there's been noise in the markets about a potential for recession. What's our perspective on that?
We think a significant recession is unlikely, but the pace of growth is slowing over the next couple of years. Consensus forecasts call for about 1.8% GDP growth in both 2025 and 2026, which is below the long-term average of roughly 3%. Inflation is easing, but is still above the Fed's 2% goal. Meanwhile, the labor market, which has been very strong since the pandemic, is showing some early signs of softening. Overall, the economy remains stable, but we see a few headwinds that warrant a more measured approach.
With the markets up significantly, should we be concerned about valuations, particularly with the Magnificent Seven stocks?
It's a fair concern. The Magnificent Seven have fueled much of the market's gains over the last few years, and their valuation levels have risen. This year, however, valuations outside the M7 have expanded at roughly twice the pace of large tech names, showing how optimism has spread across the broader market.
Does that mean there's no need to be concerned about recent market moves?
Not exactly. Valuations across most markets remain elevated, and for large cap stocks, historically they've been higher less than 10% of the time. While there are arguments that today's higher valuation multiples could be justified by innovation and stronger corporate earnings, we think it's important not to become too complacent.
Are AI companies still poised to be the market leaders for the foreseeable future?
AI is shaping up to be one of the most transformative forces in the global economy. Companies are investing at unprecedented levels, fueling record capital spending and driving growth for a select group of leaders. While these investments should enhance productivity over time, in the near term, they're pressuring profitability and balance sheets as firms search for creative ways to fund the expansion. We remain confident in AI's long-term potential, though elevated investor enthusiasm suggests markets may be running ahead of the fundamentals.
So are we implementing any changes or shifts to our investments?
We continue to hold a positive long-term view on equities, but have adopted a more balanced stance for now. With economic growth showing signs of moderation and valuations still elevated, we've modestly reduced our exposure to risk asset classes. This is a tactical near-term adjustment designed for today's environment, and we remain prepared to adapt in either direction as conditions evolve.
So what are we keeping an eye on, and what's our message to clients?
We're keeping a close eye on employment and inflation, since both will shape the Fed's next moves on interest rates. Inflation has moderated, but the path forward is uncertain, which adds to market volatility. We're also mindful of the federal debt and deficit, which could limit policy flexibility down the road. On a brighter note, a more business-friendly regulatory environment could boost corporate growth and M&A activity, helping offset some of those concerns. And finally, consumer sentiment, which has supported the economy in recent years, has shown early signs of softening. It's something we'll be watching carefully in the months ahead.
Thanks, Greg. Very helpful insights. To access the full text of our investment outlook, please click on the link below. We are always happy to hear from you, so please reach out to us with any questions that you may have.